That's dope. That's dope.
What is up, everybody? This is Scott Melker. It is Friday, February 5th at 2 p.m. Eastern Standard Time, although my guest is not on Eastern Standard Time today. So, as usual, you probably ask what the hell we're doing here today. Well, the answer is I've asked my friend Vishal Shah to come and teach us how to trade on Alpha5 Exchange, particularly some of their sort of more advanced and interesting products that are not offered in other places. So, Vishal, man, thank you for being here today.
Thank you for having me. I'm really excited.
So for anyone who doesn't know, Vishal and I actually met. They put us on a Cointelegraph live stream together, much like this. And the idea, I think, was that they wanted controversy. They wanted to pit us against one another and to have opposing views. And disappointingly to them and everyone else, we agreed on literally everything. And so it was a pretty funny experience. But and so we've kept in touch and we've become friends since. And as I often like to do, I'm trying to learn exactly what is being offered here on Alpha5 myself. He and I were planning to talk about it. We figured we would just live stream it and I would let him teach everybody at the same time. So I'm going to let you kind of run with this. If you want me to go ahead and share your screen and you can give a little introduction and show us what this is all about.
Yeah, awesome. Well, thanks for that and for the warm welcome. Yeah, so basically, there's a lot going on in the market, clearly, right? Everybody's attention's all over the place. Sometimes you can't even fill enough charts to kind of look at everything, which token or whatever. But we wanted to kind of do something different, right? I mean, you got a lot of these existing CeFi, these centralized exchanges that have kind of become at times out of fashion, right? But even the ones that exist, they go as far at times to list a new coin. We took a slightly different approach, right? We said, hey, we think there's some real opportunities, especially if we start seeing this as an asset class, into creating certain instruments that will, unlock opportunities that, institutional investors, in their heyday kind of used to, get when they traded at banks, funds, and so forth. Having come from that background, the idea was to build Alpha5 in the spirit that allowed the building out and the proliferation of these types of products, allowing people to access various things. So that was kind of the spirit in which we approached the project. And now that we're live and we're trading, I'd love to kind of walk through what it is that you can kind of access there and some of the opportunities, that we like to say are kind of hidden in plain sight at times, and how you can kind of take advantage of that. And at the same time, it'll kind of show you how Alpha5 is kind of equipped to handle that.
Cool.
Perhaps sometimes better than your traditional alternatives. Yeah. So if I may, sorry.
No, please have at it. Your screen is shared. You're ready to go.
Okay, awesome. Sorry about that. I did a little bit of hiccup on our end. Yeah, so, when you log into Alpha5 and you do your whole, all formalities and so forth, you're going to come to this page, right? Which is kind of your main, your motherboard, really, in terms of trading and so forth. You've got the same look and feel as you would on other, on other exchanges and so forth. Except there's a few differences, right? So here we have something called your XBT USD perp. This is your Bitcoin perpetual swap. If you've traded on a lot of the big exchanges, the futures and derivatives and so forth, you'll know what that is. And then we have our March future. Again, you'll see that on certain exchanges, your September future, and then what we like to call the spread products, which are denoted by this S. If the nomenclature throws you off, don't worry. We've got contract guides. You can kind of click, you pick it up. They'll tell you exactly what these kind of things mean, right? But the idea was the following, right? It's saying, hey, we've got this perpetual swap, and we've got bids and offers between them, right? And then we've got this March future, and we've got bids and offers between them. What if you can trade between them in a single click, right? And that was quite important because this is not an innovation we want to push on the market. This is something that happens in traditional markets, right? Because what happens is when you log in and you come to this screen and you go, "Ooh, wow, okay, what is this XBT USD H21 minus 13 90. What does that even mean, right? Well, what it means is the following, right? It means that you can trade the price differential between the two, and you can do that in a single click, which means you don't have to worry about manually buying, one of these contracts or selling the other one, and the market moves away from you, and you can't kind of figure it out. The system takes care of it for you, right? The system will create equal and opposite positions for you right down here, and you don't have to do anything else. Your risk is managed. The beauty of trading these spreads also is that you are reducing your you're reducing your exposure in a way, right? I mean, if Bitcoin goes from moves 50%, this isn't going to move 50%. It's going to move some factor less thereof. It's a spread. That's how they're not designed naturally, right? But to kind of best understand, maybe I'll just kind of put on some example trades here, right? So you kind of see. So what I'm doing here is I'm going to buy 0.01 or whatever it is, doesn't matter, of this spread, right? I'm buying XBT USD H21. So what that means is I'm buying the perpetual swap and I'm selling the future. Why do I want to do that? I'll come to that in a second. But once I click this, you should see two positions populate here, one for the future and one for the perpetual swap. So voila. Okay, and here we go. So you're long, your perp, you're long, you're short your March future. You know exactly what rate you got done at, right? And here's your risk. Great. There's nowhere else you could kind of done this as quickly as we just did. You would have had to kind of go piecemeal it, and trust me, the market would have moved on you by then. So why did I do what I did, right? Well, this is what we effectively, people talk about interest rates in the space, right? You talk about APY, you talk about all this sort of stuff. Where does all that stuff come from? Well, it comes from the futures curve, right? Because what we are saying is there is a forward price of Bitcoin, right? Which is your March future, your future price of Bitcoin that the market is saying, right? Well, if that's a future price and there's a price today, there's a price differential. That price differential in its large component is a function of interest rates. It's a function of that yield. It's that same repackaged APY that you kind of hear in DeFi all the time, right? So in this particular case, what I've done is I've said, okay, I want to buy the perpetual swap and I want to sell the March future. If nothing else happens, right? Assuming, everything else just goes quiet. We know that at maturity, so we're talking about March future here, right? At maturity of the March future, you are going to by then, realize these 1,300 and I think 65 points we sold at, right? 1,365. You will get those points. There's no if and or buts about it because you're buying this and you're selling this, and this has to settle very close to this. Now, it's not as so simple because perpetual swap has a funding rate, right? Being long the perpetual swap sometimes means, hey, if I'm long, I got to pay. If sometimes if I short, I collect. Sometimes if I'm short, I pay, and or I could collect if I'm long. So that kind of changes around all the time. But the interesting thing is this is highly responsive to how the Bitcoin market moves, right? So if we went today from say like 37 grand to like 50 grand, this is probably going to be, depending on how quick that move is, more than minus 2,000 or something like that, which means you have a lot more to collect. And for each day that passes, right? So say between now and March, say nothing happened. Oh, March. So this is a March future expiry, right? So I think it's March 25th. Each day that nothing happens, there's pressure on this thing to go back to zero, right? Like it's slowly, right? So, nothing happens today. Okay, it should roll down. That's the key word that we use. Hey, maybe $3 or $4, right? And it'll continue to do so. Obviously, that's not the reality of things because the market tends to move around. But the point is, when you trade this, you're taking on a very different type of risk, right? Because originally you're just kind of saying, okay, I think it's going to go up or down, and I'm going to sell it or buy it, and that's that. The future, the same thing. Hey, whatever. But in this case, you're betting on the spread, right? It's a reduced exposure. You could potentially lever up. They don't always encourage. You need to be prudent about your leverage, but you can have a greater exposure necessarily because this doesn't move necessarily as these, simply because it's a function of those two, right? It's the difference between the two. And this is what professional traders would like to, refer to as the yield curve or yield play, right? They'll look at this and they'll be like, oh, okay, this is 1,400. Does that make sense with respect to where funding is right now or where it was, yesterday or a couple of hours ago? Should I be looking at this? And this now applies for all the other contracts, right? So you could do this against the June future, right? And you look at this and you're like, oh, okay, look at this. I get collect $2,700, right? I mean, that seems pretty sweet. Like 6 months out, that's like, some 6-7%. That's not bad. And then it gets even funkier where you can actually look at the spread between the March and the June. And you say to yourself, there's something here, right? The market is telling us that this exists for the reason it exists. Well, why does it exist? Well, one way to think about it would be like, oh, how many days are between now and March? That is minus 1400. How many days are between March and June? That's 3 months as well. Oh, wait, that's minus 1260. There's something there, right? And it's often neglected. And the reason it's neglected is because it's never been presented in this format before. You've always had to kind of look at this, piecemeal it, you know, hit double the transaction costs, hit, all the execution slippage, all that, and you never had the ability to kind of trade it. This is happening because we use something called implied order books, right? Only the CME kind of invented this, right? And then then ICE kind of came out with it as well. No real crypto exchange has this, but the point is that this type of implied order book technology in and out allows what we call the intertwining of these order books, right? So these four prices here are simply a function of what's in here and what's in here. And actually, if I show something here in size, what will happen is that this order book and this order book will have liquidity as well, because the system basically says, hey, I want to know how can I get this trade done, and I want to open up all the avenues that I can kind of execute through, and it'll go look for it, right? And so this is what it kind of allows, and we'll have the next one in here, and then you have all the combinations possible. So when we list the September feature, you'll kind of have the ability to kind of go through all of them. We do the same thing for Ethereum. So yeah, you see this in Bitcoin, you see this in Ethereum, right? And the reason we want to do this again is because we want to draw attention to this stuff, right? This is going to be a natural progression for us to kind of now start showing this as yield, right? You can log in and you'd be like, oh wow, okay, I can just pick up an Ethereum thing that just gives me some sort of yield. But if you want to look at it the way professionals have and kind of see the opportunity in its raw form before somebody else packages it for you, because I guarantee when somebody packages something for you, they're going to take cut, right? So you're already kind of getting pushed out a bit. This is what you want to see. This is the raw data. This is where the opportunity is. So that has been kind of our flagship rollout product in terms of how we kind of came out to market, to kind of show how we're still progressing on a kind of a different gradient than some other places. I want to speak about something we rolled out not too long ago, right? Which we call a block auction. So sometimes you want to trade, right? And the problem is you have this, pesky algo that'll come in and just like kind of jump in front of you, right? Or if you want to buy, it'll bid better than you. If you want to sell, it'll go the other way. Well, is there a way to get something done without actually disclosing your interest to the entire market, right? And we said, yes, there is, right? So we basically said the following: let's allow for block trading. Block trading basically means, hey, I want to do a big size trade. Now, the problem with that is that the moment everybody hears, oh, big trade, which way is it? I want to know, right? Because they all want to be the same way. That moves the market against you, right? So what historically happened is people would use something called RFQ, request for quote. So they go on like a chat platform and they'd be like, hey, I want a price in this. Like, can you show me? And some guy would say, yeah, well, here's my bid and here's my offer. It's quite wide, right? There's a massive cost to getting that done. So we said, why don't we simplify that, right? We simplify that by saying, we're going to let everybody trade at mark price, or call it mid price, but really mark price, right? Hello?
Yeah, we lost you there for a moment, but you're back.
Oh, thank God. Sorry. I think I had some battery issue. I hope not, or signal issue. But the point is that, so when you want to trade at mark or mid price, right? How do you kind of enable that? Well, with our product, this is how you kind of do it, right? So say, let's pick any contract, right? Let's just pick the perp, right? Say you wanted to do something, Say I wanted to buy 100 Bitcoin, right? And I better cancel this quick. Anyways, so I want to buy 100 Bitcoin at the next auction in 4 minutes. Well, what's that auction price going to be? That auction price is going to be whatever this is in 4 minutes. It's going to be the mark price. There's no if, and, or buts about it. Usually that's going to be like the mid or the fairest price. So I go ahead and I enter that interest, right? Well, now that I've entered that interest, what will happen is that nobody else knows my size or side, but they know there's something in here, right? Now they can go ahead and they can put in their interest. And when they put in their interest, they may match, they may not match. That way, the interest keeps building. And then when the auction happens, boom, if you match, you match. And you've done your trade at mark price. And the best of all, we don't charge a penny for it. It's absolutely free. There's no penalty. If you don't get matched, you can continue putting in different things, like, the auctions are run, on set frequencies. Right now, every 15 minutes, we'll be changing that, etc. But imagine for something like spreads, right? Sometimes these things naturally, given the nature of what they are, can be a little bit wider, right? So say, hey, I wanted to buy, say 7 Bitcoin worth, right? It's this spread. I'm just going to put this in to show something, the implied order books. But say I put that in. Now all of a sudden the system lights up in here and says, hey, yeah, hey, whoever's looking at me, there's interest in here. Come do something. Actually, I've got interest in here and here as well. Why? Because the system's smart enough to figure out that this is just a function of these two. So if somebody matches me on here and somebody matches me on here without putting anything in here, I'll get filled as well, right? So it's really trying to maximize the different avenues with which you can kind of get trades done. And when it's done, it drops in here. Very simple. You're able to see everything, right? It's like boom, boom, boom. You'll see all your trades in one go. Like, the dollar, we're tether in, tether out, USDT settled for everything. It's very simple to see your risk, very simple to kind of work through it. But that's kind of the idea. And it's had good reception. You could go to, I would say, skew.com, where we're one of the sponsoring exchanges there, one of 4. The other 3 are big houses where we're just getting started. But I'd like to say, we are very deliberate. We don't want to build something that is simply going to be repetitive in the market. We need to create some value add. So we took a little bit of time and we said, hey, we get that this isn't in the domain of the DeFi buzzworld, but this is still relevant, and there's still a lot of opportunity, right? That whole saying of don't miss the forest for the trees. Well, here you go, right? Like, there are trees everywhere, and then this you want to pay attention to this stuff. There is some value to be unlocked. I think just without overkill, that's probably what I wanted to kind of highlight the most about the platform. And happy to kind of Scott, yield to whatever we need to. If somebody's got questions or if we for something else, yeah, we can do that.
Sure. So obviously, I love the forest through the trees analogy because there's so much information here. But for someone who's used to just trading perpetual swaps, I'm long, I'm short. Why is this information so important that you're finding by checking the futures prices and being able to execute these in a single click?
Yeah. So what we want to make sure is that, okay, so imagine the following. Imagine Bitcoin right now, where is it? 37,300, right? Say it goes to 50,000 overnight, right? Okay, so that's 37,000 to 50,000. It's moved 13,000 points, right? How much is the future going to move? We probably don't know right off bat, right? But we know that it's probably 15,000. Why? Because the future tends to start pricing in future activity very quickly, right? That price discovery, that unknown, this exposes, right? This says, hey, I'm looking at the acceleration of the future pricing, right? I'm trying to kind of put in the softest tone is that if Bitcoin moves up X, this is kind of the future is a it's amplified, right? Up or down, whichever. But that tells you where the market is pricing that risk, where that market is pricing the maturity, and that becomes important because what will naturally happen then, right, is somebody will sit at this and they'll be like, okay, well, this is had futures demand, this is it, blah blah blah, or future supply. Well, then somebody else will come to you and it says, hey, I want to borrow dollars, I want to borrow March. What's the price? Well, that, if we just put up some fancy equations, at the end of the day, is this 1400 is going to be the difference between your cost of borrow on dollars and your cost of borrow on Bitcoin. It is, and if it's not, there's a big arbitrage. And so those guys, interest rates traders, et cetera, will kind of eat away at it, right? So this is actually what we kind of see as the building blocks of the interest rate ecosystem, and kind of how to bring liquidity to it.
It's awesome. You're having a little bit of a connection issue, but I'm curious. You said that obviously this product seems to be an internet issue, not a mic issue. But you said that this product was sort of created by the CME. Is this something that's very popular for trading in legacy markets and with institutions, and something that just hadn't really made it to crypto yet?
Yeah, yeah, absolutely. nailed it, right? I mean, this is, even the nomenclature we use as commodities, right? This is what you see in commodities world, and how they, say M. Oh, okay, what does that mean? That means H means March. These guys, these institutional traders are used to seeing this sort of stuff. When they go on the CME, this is the names that they use. And the underlying there for a very long time has been gold and euro dollars and oil and everything. So for them, when you present me has one of the highest Bitcoin open interest and volumes now, and you just swap the underlying for Bitcoin, well, what you've got here is what professional traders, and that's very powerful, because you are not seeing anything that they would necessarily be seeing in terms of true market pricing. So it really equips you with the greatest set of data, really.
Right. I don't think that a lot of people who probably were introduced to trading initially in crypto and are just used to perpetual swaps or just buying and selling understand the importance of futures, why they exist, but how they really do keep the market somewhat under control. Right. I mean, knowing what the expected future price is what gives you any knowledge of what the price is now to some degree. Right. So having that knowledge and using that in these spreads is massively valuable. And to some degree, it's actually an easier and less risky trade.
Yeah, most definitely. I mean, it is much reduced exposure. And remember, it's weird because this will determine the interest rates, right? You could draw out the interest rate from this 1,400 over whatever 37,000, your 4% out to March, right? Or your 16% annualized or whatever. But you get that interest rate. That interest rate now goes into totality about where futures pricing should be. Then that futures comes back, drives this and this. So it just becomes it's all very intertwined, right? But in its format, it gives you the greatest exposure. And you're absolutely right. Like, you can put on a trade here now, right? For the very first time, I think, in a way where you are now taking part in this sophisticated trading market, sophisticated instrument. By using the word sophisticated, I don't want to kind of make it seem ominous. If you know the perpetual swap and how it trades, this isn't much more difficult, right? I mean, because perpetual swap, whatever, you're adding one more leg, but you're really just trading the price difference, right? If I think, put it this way, right? If you ask me, what am I going to do right now in this market? What am I going to do with the spread? Okay, if I think Bitcoin is going to go much, much higher in a short time frame, I'm going to sell this thing, even though I know that this has to go to zero, right? The future is going to blow out higher more, which makes this go more negative. Again, this is all in the contract guide, so don't let me confuse you. And like you told me, hey, if Bitcoin's going to do nothing, or you think if it's going to just kind of like, just slow down or maybe even come off a bit, right? What would you do? Well, I'd buy this, because the future value, if you're telling me it's not going to do something, you're implying what it's going to do in the future. It doesn't matter how far that is from now. Market tends to react quite quickly. You'd go ahead and buy this thing. Go to zero in the next week. It might go to minus 1,100, minus 900. Well, we were just there, right? I mean, look, on February 4th, we were trading like minus 840 or something, right? And now we're at 1850. So it moves, right? It responds to markets. So it's a different type of risk, yes, but still, very opportunistic.
We had a question: is it DeFi or CeFi?
It is CeFi. It is CeFi.
Sure.
I would say that there is two different types of trading that I think are going to be very popular, and I think they can happen side by side, right? At times, you really need a DeFi platform where it's not your coins, not your keys type of game. But then at the same time, you need to protect yourself of again fat fingers, wrong addresses sent, irreversible code that kind of holds you hostage to whatever happened. You need to trust a third party. We are kind of, you'll see we only listed Bitcoin and Ethereum right now, right? We did that very deliberately because we are very cognizant of key KYB, et cetera, so forth. We want to make sure we're doing the right thing, right? So we don't want people to come onto our exchange, lose money. We want to make sure that we're kind of providing the right environment. And so if you have a human to speak to on the other end, We think that, especially with products when they get a bit more sophisticated, that makes it a bit less ominous, welcoming, and that's the reason we thought that the CeFi infrastructure would probably be more appropriate.
Also seems like, I mean, to do these kind of products, that's a given, right? I mean, to be able to trade these spread products and stuff, it has to be a high-end institutional grade exchange. You can't do this on Uniswap.
Yeah. I don't think we could build this in DeFi, the analog, at the moment. It doesn't. The stuff we need wouldn't exist. Yeah.
Okay, so we had another question here, which is a great one. What type of group does Alpha5 target exactly? Example, Binance is putting out an easy to understand platform to make crypto available for everyone. Is Alpha5 made for more advanced traders?
Well, that's a. I feel like me answering that question directly would probably not answer appropriately, which is the following, right? We have been talking, this space naturally, by virtue of participating in it, is a message for the provision of access to a lot of things that were originally kind of, reserved for a select few, right? So when we say we target it, right, or only for this, no, it is for people to realize that there is an opportunity here, right? We will take what we can to kind of show you how to do a lot of these things. I mean, and trust me, there is vindication in this thought, because we've done a few things in DeFi. I've done a few things in DeFi, and I'm like, wow, how do people even understand, like, from here to here, move this? There's a lot of people doing that, right? Well, if they can understand that, they can definitely understand this. And it's really just not as hard. And that because we realize that the potential target market is much larger, but it actually just gives me good pleasure in knowing that, hey, this is simply not for a reserved type of people. People can look at this, and we will put out guides. There's articles on this already out there, and Telegram's already there, and people ask away all the time. So yeah, happy to kind of educate if we can in the most in the great, in all humble need to, and help and kind of get the right people involved.
Yeah, I actually think it's not complex at all. You just have to take a few minutes to understand the product, and then diving into it. It's a very familiar process, like trading anything else. I think that's actually the point when I've kind of tried to play with it, is it makes something that would seemingly be complex become a very simple trade, right? As you said, you don't have to do 10 things. You just do one thing, and you see that inefficiency or something that you want, and you literally just hit buy and sell, and it executes the entire thing. Yeah, people on Binance may be used to buy and sell, right? So it's more complex than that, but
yeah, that's exactly right. I mean, there was undoubtedly a time in any future trader's mind, right, or a trader swap's mind, because normally this is how they're listed on most exchanges. You look at this and you look at this and be like, oh, is there something to be done between the two? And yes, it is, and we've put it for you in front of your eyes as a standalone product right here, right? We made the access a lot easier, and so you can kind of go and do your thing.
Another really cool question from Jim Miller. I came in late, sorry. Any plans for micros down the road if CME does a micro Bitcoin contract? The CME Bitcoin contract is big. Thanks.
Yeah, well, luckily with us, there's no contract size limit, right? So as you saw from my trade, it was 0.001, right? You could do whatever you want, right? As an on the futures platform, that there is no limit. It's whatever you like.
Yeah, that's an important point, because I mean, we talk about the CME all the time, but the CME is not accessible to your average trader, right? Not only because of size, but even just because of access. It's not like you can just go place an order on the CME if you're a retail guy.
No, you can't.
Yeah. So that's the most of the questions that we have. I haven't even told people, hey guys, you can ask questions. I typed it in there, but feel free if you guys have any more questions that you'd like to know about the exchange, or just in general, because it's not often that you have the CEO of an exchange to directly ask questions to. So I'm actually curious, what are you thinking about Bitcoin at the moment?
I'm afraid to answer that. So
me too. Always. That's why I'm asking you.
Well, so here's what I'd say, right? And I'll go first. You have the benefit of going second. Is that I'm looking at stuff like this, right? This is kind of a little to me when I look at the funding rates, right? Which tells me that, originally when we had this rally in December and or November, we had that massive rally. That was not that high. Which told you there's a lot of spot coming in. All this institutional capital that we heard about, that's when they were doing the legwork, right? Now who's doing the legwork? Crypto natives, the leverage traders, right? It's all open interest. The problem though is that's very well known, right? Everybody knows we're doing our own legwork right now. The question is, are we big enough of a snowball? Potentially. I'm not bearish, but I don't think that we can go unchecked without massive bouts of volatility on boats, right? People, there are weak hands, right? I mean, look at some of the stuff that we've seen, right? Like not just here, but in DeFi stuff is doubled or tripled, right? Or a week and a half or 2 weeks. It's unbelievable. Insane. And we're talking about protocols where you can actually, get size done and, are quite vanilla and blue chips. So that in a way, in a sense, somewhat concerns me. But the fact that we are not oblivious to it doesn't make me think disastrous, because it's when we have no sight or we've lost perception or we've lost calibration to those things that do we actually become more susceptible. I'm not sure we're quite there, but I fully expect deep pullbacks at times. So yeah.
Yeah, it wouldn't be Bitcoin if we didn't have deep pullbacks at times, right? Kind of what makes it exciting. I mean, I agree with you. Like, I think from the chart and the general vibe is very bullish. Like, I don't really see a reason to get overtly bearish, but I mean, when longs stack up this high and funding is this high, somebody's going to take advantage of that at some point, right? And so whether it's huge volatility or it drops massively, it seems kind of clear that at the moment, as you said, the money is trickling down, right? And we saw this. I'm not saying that history will repeat itself, but we certainly saw Bitcoin top in 2017 December, then Ethereum top a month later in January, and then this huge trickle down to medium and low cap, and then obviously sort of a correction. I would love to see that exact process, but ending in Bitcoin going up instead of Bitcoin going down.
Yeah, no, I think so. I mean, honestly, the narrative doesn't change for me if we're either here between 42 and 30. Nothing changes. It feels the same, right? But that's a big range, right? And that has huge implications for other things as well. So patience, but bullish patience.
Right. So there's nothing that makes you overtly bearish for 6 months or a year down the road, or what we're talking about the end of 2021 and things like that. You can say if there is, it's fine. I mean,
well, predicting a year in this space is like basically, I don't know, predicting my life.
100 years in the Dow.
Predict a couple of days is hard as it is. I would say the following, that there is one factor that I think that we need to be aware of. I'm not sure if it's a risk yet, is that Bitcoin has become, or is becoming very quickly, a macro toolkit asset, right? Meaning that hedge funds are putting this into asset class next to gold and all that sort of stuff, which means it becomes susceptible to exogenous risks, right? So if there's a global market move that is not in the favor of those asset classes, Bitcoin will now exhibit a much stronger correlation than it has historically. So that's just something to be wary about.
That's funny, because I think most Bitcoiners would tell you the opposite, right? Oh, now we're a store of value, so this is going to be our moment when the market crashes. Bitcoin's going to rocket. But we saw it in March. I mean, we saw it in March. It recovered fast, but we saw it in March. Yeah, for sure. So there's a lot of people asking. And by the way, guys, if you want more information, the link is in the description below for Alpha5, because people are kind of asking. We have a couple questions here about the United States, not available for those in Utah. Looks like no US yet. And I think people need to understand that officially the United States is not allowed to have fun ever. Is that accurate?
Yeah. Unfortunately, we do play by that is the right thing to do. So yeah, it is not accessible by U.S. citizens or for people from within the U.S.
Awesome. Wow, nothing is. And if you live in New York, even the stuff that's accessible in the United States is not accessible to you. It really is kind of unbelievable. But All right, man.
Yeah.
Well, think that about wraps it up. Everybody, definitely check out Alpha 5. Click on it. The link below in the description. I'm supposed to ask you to hit the like button because apparently that's a YouTube thing. And I know that it's Friday night for Vishal, that this is a kind of a rough time. So thank you so much for taking the time and sharing that. I can't wait to dig deeper into it myself.
Thanks a lot, Scott. I really appreciate it. And conversations in the future.
All right, man. Thank you.
Thank you. Cheers.